Hello, everybody. My name is Patrick Cooke. I am Oxford Business Group's regional editor for Asia, and I am here today in OBG's bustling Manila office on what is another stiflingly hot day. And joining me from what I'm sure is a much more serene Singapore is Ivan Tan, who is the Global Market Director for Southeast Asia of Enterprise Singapore. That's the recently merged government agency supporting enterprise development. Ivan, welcome to this podcast. I'm sure you're extremely busy following the recent merger, so we do appreciate you taking the time out to help us digest the results of OBG's first ever ASEAN Business Barometer.
Thank you, Patrick. Indeed, it has been pretty busy for us. Not so much because of the merger, but more relating to what we are going to talk about later on, which is the opportunities in Southeast Asia. So as Patrick mentioned, I cover the Southeast Asia market in Enterprise Singapore. So what we do on a day-to-day basis is to support Singapore-based companies to go into Southeast Asia, and we do so in a few ways. We provide market information, especially in places where we have our overseas centers, and we are present in Thailand, Indonesia, Philippines, Vietnam, Myanmar, and Malaysia. We also engage a lot of the local companies in these 6 markets so that they could be partners to the Singapore-based companies. They are looking for either customers or joint venture partners. And finally, because we are a government agency, so where there are cases where we need the Singapore government to engage our foreign government to create a better environment for Singapore-based investors, we come in as well. And that's what keeps us really busy on a day-to-day.
Excellent. Well, I think then you are the perfect person really to help contextualize the results of this survey. Just for any listeners that don't know, the Oxford Business Group Business Barometers are business sentiment surveys that we conduct face-to-face with C-suite executives all across the emerging world. Previously, we have just published these as country-specific surveys. But last month, April, we published our first ever ASEAN survey by combining the results from the ASEAN markets where Oxford Business Group is actually active. So that would be Indonesia, Philippines, Thailand, Myanmar, Vietnam, and last but by no means least, Malaysia. So let's go straight into it, Ivan. I wanted to talk first of all about the general business sentiment questions that we ask every CEO that we meet. Looking across the sample, we see that some 84% of the executives across the 6 ASEAN member states describe their expectations for local business conditions in the coming 12 months as either positive or very positive. And another 73% said that their firm was likely to make a significant capital investment locally within the next year. So broadly speaking, what are the main factors at play that are making ASEAN CEOs so bullish about the investment climate in the region at the moment?
I'm really not surprised that you get this overwhelming positive response for Southeast Asia. And I think there are quite a number of factors that are going in the favor of Southeast Asia for the past couple of years. I will just highlight 2 of them. First is that this is a region that needs a lot of infrastructure investment. For example, if you look at like Indonesia, just that country alone will need more than US 1 trillion investment in infrastructure from 2015 to 2030. The other country that needs a lot of infrastructure investment will be Vietnam. I think just maybe 2 weeks ago, the Vietnam Prime Minister, just before he made his state visit to Singapore last week, he announced that he has approved more than US 900 million of investment into just economic zones and industrial park from now until 2020. So all this, what we call investment in infrastructure needed in countries like Indonesia, Vietnam, Philippines, and so on, could not be delivered by the government alone. And that's why you see that they are courting foreign investors in many ways, either working through their own public-private partnership processes or encouraging, let's say, some of the state-owned companies in the case of Indonesia and Vietnam to partner investors who go in. So this creates really a lot of opportunities for companies that are in the utilities business, in transport infrastructure, in logistics, and maybe even in the export and distribution of raw materials and construction materials. So this infrastructure deficit, which I think will create opportunities for companies, will last for at least the next 10 years, 20 years, and so on. So that will be one big sector where I think many CEOs are looking forward to capitalize on. And the other really is that Southeast Asia or the ASEAN region is a very, very big market. We are talking about population 640 million just today, and it continues to grow. So unlike countries like China, which is facing aging population, a population slowdown, that is not happening in Southeast Asia for the next maybe even 20 years. So by 2030, this whole region will have a total population of about 710 million people. And as compared to China, it's not just a big population, it's also a young population. If you look at the median age in Southeast Asia today, is less than 30 years old. And that demographic sweet spot has a very wide window. Even by 2030, the median age is only 33 years old. That, along with a fast rising middle income class, we are talking about GDP growth of about more than 5% in Southeast Asia, means that there's a lot more new consumers that's going to enter the market. And young people, they will want their luxury goods, they want better healthcare services, better education, travel services, and so on. So no wonder that so many companies are looking to tap on this growing consumer market. So in Enterprise Singapore, as I mentioned, we have our people based overseas. We have been seeing an influx of Singapore consumer companies that want to go in. For example, just Myanmar alone, in the past 1 month, we have led a mission of a business delegation of food services and manufacturing company. And the next week after that, and subsequently after that, we led another group of education services company. So this is just a tip of the iceberg. And I will say that consumerism and infrastructure, these are the two broad fundamentals that drive ASEAN's growth and what makes so many CEOs excited about the prospects in ASEAN.
Yeah, I would agree. I mean, just talking about that sort of infrastructure boom, you might be able to hear behind me in Manila. I'm in the quietest room in the building. You can probably hear construction work, traffic. Obviously, the Philippines is having its own huge infrastructure push at the moment through the Build program. And we talked a lot about the positives, but let's also talk a little bit about the risks, because you mentioned China, and you mentioned China in terms of its demographics and demand, but also China obviously looms very large in the minds of the CEOs that we meet. China is now quite comfortably the main trade partner of ASEAN, and it's an increasingly important source of FDI and inbound tourists. And this is reflected, I think, in the fact that 33% of the CEOs that we surveyed across the 6 countries cited a slowdown in Chinese demand as the biggest external factor that poses the most significant risk to their national economies in the short to medium term. If we look at what's happening at China at the moment, obviously we have a newly empowered Xi Jinping there, and they're looking to move towards this sort of model of what they call, instead of high-paced growth, high-quality growth, with consumption as the main growth driver. How vulnerable are ASEAN member states from this Chinese intent to rebalance the economy?
I would say that this is not a new trend. I think ASEAN has been feeling some of this impact of the China's rebalancing for the couple of years. I think first and foremost will be that countries like Indonesia and Malaysia that have a more significant part of the export in commodities, I think especially Indonesia will feel more of that impact. I think if you look at before the global financial crisis, Indonesia, Brunei, and so on, they have been riding on that commodity boom, and that commodity boom, a large part is due to China's growth model, which have focused a lot on infrastructure investment. With this rebalancing, I personally I think that this commodity boom, this demand for all these raw materials for infrastructure, at least for China, is not going to come back anytime soon. So already these countries are affected. But at the same time, there is also opportunities from the rebalancing in China. But first, to give a little bit of context, when we talk about slowdown of growth in China, we compare it to the past 2 decades where it was double digit. Now we are talking about 6%. But what is 6%? It may look low, but if you look at China's GDP now, which is I think something like US 11 trillion, 6% on 11 trillion, we are talking about maybe the size of Switzerland or Saudi Arabia's economy every year. It is still a very, very high kind of growth. And with that rebalancing towards consumption, it creates opportunity for those ASEAN economies that have their own brands, food products, and so on to enter the Chinese market. So, and where Enterprise Singapore is concerned, we have, I think, 9 offices in China. We continue to see many of the companies, at least from Singapore, continue to tap in China. The question will be, how do you compete in China? And we believe that one very important consideration will be that not just for Singapore, but for any other ASEAN companies that are going to export their products into China, you may need to have what we call a digital strategy. How do you tap on e-commerce, the social media to create branding awareness for your products in China? So I think there is that silver lining in the crowd, despite the slowdown in the Chinese economy. Now, the other dimension of this rebalancing is that as China become much more developed, the Chinese companies need to increasingly look outward for growth. Personally, I see this to be not too different from Japan. I think after the Second World War, there was a period where it was a lot of investment into Japan for rebuilding. But when they have reached a certain point in the economic growth, they started to go out and they invested a lot in Southeast Asia. I think China is going through this phase, and I think this is where the Belt and Road Initiative come in. Although it's a government initiative, but you can see the commercial logic in this. And with the investment by Chinese company into Belt and Road infrastructure in Southeast Asia, they will bring along also their own Chinese enterprises. I mentioned very earlier on that there is a huge infrastructure deficit in Southeast Asia that cannot be plugged in by the Southeast Asian government alone. And this is where the Chinese companies can play a part in this. With the Chinese investment, some of this infrastructure will be accelerated, and that in itself will create spin-off to the Southeast Asian economy. So that's the other part. And a more recent phenomenon will be the importance of the Chinese tourists to the Southeast Asian economy. Countries like Thailand, Indonesia have always been quite pretty dependent on tourism. I think especially Thailand, and you will see that the Chinese relative to the Japanese and the Koreans have also rise in importance. So as the Chinese become richer, yes, there may be and China changes economic growth model, there may be so-called less opportunity in some ways in China, but I believe overall for Southeast Asia, there's still a net plus with tourism, with Chinese investment into the region.
And another risk that people talked about in our survey when we looked at external risks was trade protectionism. Now, this was conducted obviously before all the rhetoric about a global trade war started in the first quarter of 2018. Obviously, this is creating a problematic trading environment for not just US and China, but Southeast Asia and all the other economies across the world. 19% of participants in our survey mentioned trade protectionism as the biggest external risk to the country's economy. Do you think that figure would be higher if it was conducted today? And also, which ASEAN member states do you think are perhaps most at risk if this global trade war rhetoric continues, and if President Trump's fixation with bilateral trade deficits continues to manifest itself in the form of tariffs?
That's a very good question. I would speculate that if the survey is conducted today, you probably will see a higher proportion of participants cite trade protectionism as the biggest risk to their country's economy, maybe even more so than so-called China's slowdown. I think when a few months ago, probably this was still a more vague kind of threat because as you pointed out, the Trump administration since the first day have spoken about America first. So there is always this threat of a trade war sort of like, hanging over the global economy. But the past couple of months has seen it to be more specific, where the Trump administration announced a tariff on quite a number of product categories on China. So that means that for CEOs, for companies that are part of the value chain, they now see that this is really a threat that might just be realized. So that's why I believe that the percentage of participants will indicate this as a high risk probably will increase. Now, it's not such an easy question to answer on which are the ASEAN economies that will be most affected and whether it will be in a positive or negative way. We probably need to look into the specific products that they export, to what extent they are part of the China value chain, and also it's kind of like a game theory, right? If the trade war happened between China and the US, then does it mean that in turn US could buy more from Southeast Asia and China could buy more from Southeast Asia, and where will the Chinese products go? So it's kind of complicated, but I will hazard some of my own thoughts on this. At the very high level, if you look at the countries in Southeast Asia, they have varying exposure to global trade. The countries that have a greater exposure to global trade will be Singapore, Malaysia, Vietnam, and Thailand. Not necessarily in this order, but these are the more export-oriented economies. So all else being equal, if you have a trade war, be it just between China or the United States or anybody else, these are the countries that might be the most affected. This is in contrast to economies like Indonesia and Philippines. They have a large population. Indonesia about 250 plus million people, and Philippines I think nearly 100 million. So to some extent, the large consumer market maybe can buttress some of this impact of a slowdown in global trade. So that's one way to look at it. But if you go one level down to look at the specifics of the global value chain, one thing that stands out is that Philippines have about 16% of their export, which is part of the value chain in China, going eventually to the US. So what I'm talking about is that Philippines probably export quite a bit of their electronic products into China, which get further value add before it goes to the US, which means that at least when it comes to the electronic sector for the Philippines, if the trade war between China and the US is realized, they might take a big hit. So that is one thing that we should note. I believe that it could be similar for some other countries like Vietnam and Thailand, but we might not know the extent of it. So that is one angle where Philippines probably could be affected. But at the same time, some countries in Southeast Asia are competitors to China. For example, Vietnam is a big electronic exporter. They also export quite a large volume of textile and garment products. So again, if there is a trade war between the US and China, and Vietnam could well be a substitute exporter to the American economy. So that's one way that Vietnam could gain, and I think some companies maybe are really hedging that by by investing more in Vietnam. And we know that China import a lot of soya bean from the US. There are countries in Southeast Asia like Indonesia that also export soya bean. So they could increase their export to China in the event that the Chinese decrease their export of soya bean in the States. About one and a half months ago, I met up with my counterpart in Thailand. They shared with me that one of the worry of a trade war between the US and China is that now China has so much that they are exporting to the US. So if that market is going to be closed to them, where would they export their products? Some of it could go more to Southeast Asia. So they are worried that this will in turn bring down prices, for example, in steel, cement, and that will affect the domestic producer. So I believe that that ultimately there will not be a winner in a trade war. Most likely everybody on the aggregate basis will be worse off, but there could be specific sectors in Southeast Asia that could gain, but there will be a lot of losses on the other side. I think one big loss would be the fact that if Chinese income fall, and I mentioned about the importance of Chinese tourists to the Southeast Asia region, we may see a hit on tourism as well. So I hope that it doesn't happen, because I believe that despite some gains here and there for Southeast Asian countries, on the whole, a trade war is not good for Southeast Asia.
No, I agree. I think it's a lose-lose situation. The Chinese often talk about win-win scenarios, and this is definitely not one, in my opinion. Let's just go on to the sort of final talking point that I want to bring up, which is about the business environment. We had a couple of questions in this survey related to the business environment in each country, and we saw quite wide disparities when we collated the results together into one collective survey when it comes to the questions around the business environment. For example, 55% of respondents across the 6 countries said it was easy or very easy to access credit, whereas 40% said it was difficult or very difficult. Half of respondents said their respective tax environments were either uncompetitive or very uncompetitive, while 41% said the opposite. And then we had 47% of respondents saying transparency in their markets was high or very high relative to the region, whereas 41% said it was low or very low. So it's obviously very difficult to paint a coherent picture across ASEAN when it comes to these particular factors in each member state. What do these clear national disparities in the business environment say about the difficulties that ASEAN perhaps faces in its attempts to build this cohesive single market and production base that intends to promote shared prosperity across all members by 2025 in accordance with the ASEAN Economic Community Framework?
Yes, I think what we can see from here very clearly is that although we always talk about ASEAN and its multilateral kind of political organization, it is a very, very diverse region. I mean, if you compare it to other regional blocs like the EU, you can see the huge disparity, in terms of everything from the GDP per capita of the countries to the openness of the economies, to the maturity of the institutions, and so on. And I believe that this disparity that you see is really because of these different stages of development. And at the same time, things are changing very quickly in each of the ASEAN member states. And I think those change probably also create that kind of uncertainty and discomfort to the businesses. I mean, just to give an example, if you look at ASEAN, Myanmar only started to open up in 2012. And since then, they also had a change in the government to the National League of Democracy that was only elected in 20. They won in 2015 and only came to power in 2016. So you can see that in the case of Myanmar, they are only beginning to kind of like update their regulation. And I think all this means that for the companies that are in Myanmar, for example, they will find that a lot of things are still really difficult. And not to also forget that besides some of this the room for improvement in various of the ASEAN member states, the the laws, the culture, and so on across ASEAN member states are also very different. This also means that when a company that has been operating, let's say, very successfully in Malaysia, for example, and they need to, or are on the way of going into another new country, let's say Vietnam, they have to relearn everything, the rules and regulation, the labor law, which are the government agencies that they need to talk to, certain sectors which may be open in, let's say, one country may not be open in another country. So there's a lot of relearning, and I believe that this cross-border differences in the institutions, in the business environment, and the fact that each ASEAN member state are still developing their institution, updating their law, opening up their sector, explain why you see that disparity in the survey response. So that is one thing. But I think that there's still some optimism that we can look forward to greater improvement in business environment, be it 2025 or later on. The fact that 10 ASEAN 10 countries with such different institutions, laws, culture, languages can come together to work on the ASEAN economic community, I think that is almost like a miracle. And there have been good progress made for the past decade or so. If you look at the trade in goods, already more than 99% of the goods traded between ASEAN member states are tariff-free. So that is already a huge step forward. So other initiatives that the ASEAN member states are working on to further improve trade, and this year, Singapore as a chairman for ASEAN, we will focus a lot on that, will be the ASEAN single window. So this should harmonize the custom process, the documentation for exporters, manufacturers within ASEAN trying to trade with each other. There is also this ASEAN Comprehensive Investment Agreement. This is overarching kind of framework which is providing more transparency and protection and recourse to investors from fellow ASEAN member states. So this really should give investors in each country more certainty, more comfort to invest. I think that's another huge step forward. So these are just two examples of what I call rule-based kind of architecture that ASEAN is working on. But besides that, the government in each of the ASEAN economy and the private sector are also reaching out to see how they can cooperate together. So for example, there are quite a lot of work groups on different areas from banking and finance to IP protection to competition policy. So these are all driven so-called one level down a specific government agency that has set up their own committees and platforms that they meet every year to share best practices to help each other out. At a business level, the Chamber of Commerce of each of the ASEAN country, for example, in Singapore, it will be the Singapore Business Federation. They have also worked together to form the ASEAN BUC. I think it's the a business council comprising the top chamber of each country. So they hold events, conferences, and other discussions every year for their members who network with each other to also pull together the feedback of the businesses that can in turn feed into the government machinery so that they can consider what are the pain points of the businesses and how this could be addressed at the ASEAN agenda. So I think we still have a long way to go, simply because this is such a diverse region. But I'm optimistic that there are already so many mechanisms that are put in place, which over time I think will only make ASEAN a more pro-business environment.
I agree. I think everything's moving in the right direction. I think this survey that we conducted generally was very positive. There is so much more that I would like to discuss with you and contextualize and digest in this podcast, but unfortunately, I think that's all we have time for today. So, Ivan, thank you very much for joining us and providing these very insightful comments to help us understand more about what's going on in the business and investment environment here in ASEAN in 2018.
Thank you, Patrick. I'm honored to be here.